Hey guys, so it's been a while since I took a look at Polygon. The ticker for this is MATIC, and I'm currently on the weekly time frame. Now, before I get into the analysis, I should mention that if you're not subscribed and you want to get notified when I release new TA videos, I'm going to be doing about 2 to 3 videos every single day of different coins. Just click subscribe, click the bell, and then click on all, and that way you'll actually be notified when I release the content. If you don't subscribe and then you click away, you might have a hard time finding this channel again in the future because it's new. There's only around 600 subscribers. And because of that, I'm not really prioritizing the search algorithm. So as you can see when we take a macro view of this, it's a bullish chart formation, right? This would be like kind of like a bullish pennant. So we have lower highs, but also we have higher lows. And, they're supported, the lows are supported by this upsloping level of support. And these highs are just bouncing off this downsloping level of resistance. Eventually, the idea is that, the price will converge within this range and then we'll break out. Interestingly enough, the breakout point where these resistance and support lines meet the apex is right around late April 2024, which is when we're expecting the halving to be, the Bitcoin halving, which normally launches the kind of crazy phase of the bull market, right? So if the price just ranges within here until then, kind of boring price action, but we're in the boring phase of the market. So yeah, if you're going to trade this, obviously just mark these lines on your chart. So just basically, from the wicks here, draw from the wicks, just so we can be sure if we get a breakout in either direction, then it's legit, and then draw this down sloping level of resistance as well. So something interesting is happening on this chart that we can see if I go to the shorter time frame. So let's take a look at the daily. And you'll see, actually, before I get into this, I should show right here. So this is basically an ascending wedge, which we broke down, right? So this is a bearish chart formation. We broke down from that. So now, having shown you that, what you can see is happening here is obviously the price is just bouncing off these main two levels of support and resistance, the trend lines that I just mentioned. But down here, we had a level of resistance here. So we had resistance, but we recently broke out of it. And interestingly enough, we were forming this chart pattern. We were in this channel, and this is like a bear flag, right? So we had an impulse to move to the downside, forming this flag-like formation. And normally these break down. So I was expecting maybe the price is going to come back down to retest this support level, but no, we broke up. We broke up from this level. And now, I always mention this, but when you break a level of resistance, normally the price will kind of come back and back test it and see if it holds as a support. But so you see what's happening now. The price is just kind of being supported by this previous level of resistance. So yeah, this is the support on the lower side right here. And now we're forming a new level of resistance right here. But this formation is the opposite of this, right? So we had an ascending wedge, and what we have here is a descending wedge. And this one will normally break to the downside. This one will normally break to the upside, statistically. So if that happens, then we can expect an upside break from this falling wedge formation. So yeah, pretty interesting. Also interesting is where we found support right here. Of course, it obviously lined up with this upsloping level of support, but also if you take a Fibonacci and I run it from the bottom, the swing low up to the swing high here, you will see that we got support at the golden pocket range, right? So I always look to this as a potential level of support or resistance. So we're being supported by this range here, the 6.8 to the 65%. By default, the Fibonacci tool has the 61.8, but I manually add in the 65%. And I just consider this as a range. So yeah, it's good that we are getting support around here, and obviously this upsloping level of support as well. And on the upside, so if you want to say if you have like a strong impulsive move and you want to know where the potential levels of resistance are to the upside, you can take the same tool, and this time, instead of running it from the swing low to the swing high, do it from the high down to the low. And as you can see, we got rejected right off the 50, right? Strong rejection off the 50. And now we're just back at this kind of range, the 23.6. I don't really pay too much attention to this, but yeah, that's where we are right now. But it's confluent with the price, right? Because it was the previous level of resistance right here. So now it's interesting to see that it's kind of holding a support, and we're coming to the apex of this falling wedge, right? So from here, I mean, I would expect a breakout just because statistically that's the highest probability move. You know, if one was to enter a trade here, what they can do is they can, you know, enter a long where we are right now, and then you would place the stop loss just below the support level, and then we would target, even if we just targeted very conservatively this level here, that would give me a risk reward ratio of 1 to 7.36. So that's massive. Even if I entered here and I wanted to be a little bit loose with the stop loss, just to make sure that I am going to be below this this level of support, I can drag my stop loss even below that here. And even then, I would risk 5.79% to get 16.66% to the upside. Almost a 1 to 3 risk reward ratio. That's quite good. And if I, you know, as the price moved up, if I moved my stop loss, you know, first to break even, and then I just kind of trailed my stop loss up, ultimately I would like to target this level of resistance right here, the 50% retracement. And that would give me a risk reward ratio of 1 to 5.67, which is really great. 32% to the upside, and just a potential 5.79% to the downside. So yeah, if I was to enter a trade on MATIC, on Polygon, that's what I would be looking at right now, just based on the, you know, the price structure, right? And just this pattern, this falling wedge typically breaking to the upside. I'm going to switch it back to here and just see if we can see anything else. Yeah, nothing too crazy. This is fairly, I mean, simple. We're just in a bullish flag formation or bullish pennant formation. Look at it on a weekly, and yeah, I mean, there's nothing to be too overly concerned about. We're just kind of in the lower range of this, forming a falling wedge. You know, I would target the 50% retracement on a you know, kind of midterm trade on the daily time frame. And obviously, you know, if you just want to take the highest probability trades within this pattern, then don't even mess around when the price is in the middle. Just wait for the price to come up to this this line here. Maybe you could look for a short, and if the price falls back to this support line, maybe you can look for a long, right? So yeah, anyway, that's just a quick update on MATIC Polygon, and hopefully that helps. And I should mention that if you're not subscribed and you want to get updates every time I release new analysis videos, I'm going to do about 2 to 3 videos like this every single day. Just click subscribe, but when you do that, click the bell and then click on all so you actually get notified when I release the content. If you click away without subscribing, then there's a, you know, you might not be able to find this channel again because I only have about 600 subscribers. And yeah, because it's a new channel, we're not really prioritizing the search algorithm, right? So yeah, if you found this helpful, just click subscribe and take care. Have a good day. Bye.